Hello and good morning. Well, today I'm having one of those mornings, but I just have to make a video. So, you know how you really don't like paying tax up to the point of probably hating paying tax? Well, what if I told you that the government has introduced yet a new form of taxation? Yes, I know. Let's talk about capital gains tax. Now, what is capital gains tax? Capital gains tax is basically tax that you pay on your personal gains when you sell property or you dispose of property and you gain an interest, then you pay tax to the government. Now, capital gains tax is not an entirely new introduction. It is actually a reintroduction of tax. It was first introduced in Parliament way back in 1982, way back in the day, and was suspended briefly in 1985, and now by an amendment to the Income Tax Act, by the Finance Act of 2014, capital gains tax is back. So the best you can do is to understand how liable you are to pay this tax and under what transactions or what communications you're liable to pay the tax. So let's talk about the rate of payment of capital gains tax. So capital gains tax is rated at 5% of the gain or the profit that you achieve from selling property. Now, capital gains tax is a final tax. It's called a final tax. This means that it cannot be offset against other forms of tax that you are liable to pay. Now, who pays capital gains tax? Basically, it's the person who gains from a transaction. And this is often, in the case of a transfer, the transferor. Now, let's get into the depth of capital gains tax. This is now where most lawyers will be like, but I think it is one of my favorite steps. This is calculation of the tax. So capital gains tax is computed at the rate of 5% of gain. Now, gain is defined basically as a deduction of the cost of acquisition, often referred to as the adjusted cost of acquisition of the property. This is the price at which you obtain the property if you bought it from elsewhere. And now this rate, the adjusted cost of acquisition, is deducted from the transfer value or the sale value. Now, often remember that the legal costs and valuation costs that are incurred at the point of acquisition are often added to the cost of acquisition, whereas legal costs, valuation costs, stamp duty costs, and advertisement costs that are incurred at the point of disposition or sale of the property are deducted from the selling price of the property to obtain the adjusted transfer value. Now, you must be wondering, must I pay capital gains tax in all transactions? And the answer is no. There are actually transactions that are excluded from payment of the tax, and there are other transactions that are exempted from the tax. Now, I'm saying excluded and exempted as opposed to excluded or exempted because there's a difference. Now, exemptions are under paragraph 36 of the first schedule to the Income Tax Act, whereas exclusions are under the 8th schedule of the Income Tax Act. Now, the difference between these two concepts is that whereas exemptions consider these transactions to be transfers of property, but simply merely by the will of law exempt them from payment of the tax, exclusions do not, in the first instance, recognize transactions as transfers. So exclusions apply where transactions are not considered transfers, and exemptions apply where transactions, though considered transfers, are actually not liable to payment of the tax. Now, let's begin with exemptions. Now, there are a couple of transactions that are exempted from payment of the tax, and these include, for example, transactions whose transfer value is less than 3 million Kenya shillings, as well as transfers that involve the transfer of property, agricultural property to be specific, that has an area of less than 50 hectares. Now, other transfers that are exempt include transfers that are made in the course of liquidation of a company, and basically transfers made by the personal representative, transfers made by the liquidator or to the liquidator, and transfers made to the beneficiary. often referred to as property that vests in the liquidator. Now, other forms of transfers that are exempt include basically transfers that are between family members. And this also falls into the realm of exclusions. These transfers are excluded from payment of income tax, of both income tax and capital gains tax. Now let's move to exclusions. Now exclusions basically are not considered transfers on the onset. And of course they include transfers that involve transfer of property to secure a debt or a loan. Yes, you heard it right. Charges are excluded from payment of capital gains tax. And other exclusions, of course, involve transfers between family members as well as transfers of wholly owned company property, wholly family owned company property. Well, now let's move to time of payment of capital gains tax. So at what point are you expected to pay capital gains tax? Now, this area has actually not been devoid of challenges in court. And initially, under the 8th schedule of the Income Tax Act, capital gains tax is supposed to be paid anytime on or before the transfer of the property. However, the Kenya Revenue Authority issued a public notice way back in August of 2016 and stated that capital gains tax should be paid simultaneously with stamp duty. And of course this caused an uproar, and the LSK, the Law Society of Kenya, went to court, and the matter was litigated, and the section, that is the relevant section, was paragraph 11 of the 8th schedule, that is paragraph 11A, a new introduction into the 8th schedule of the Income Tax Act. And the court decided to declare that section unconstitutional. So in this regard, therefore, we were thrown back, and a bit of shade went on to exactly at what point should I be paying this tax. Well, currently, the matter stands that you can pay this capital gains tax within 20 days of registration of your instruments. And this is actually will prove to be convenient to both transferors and transferees, because now it goes into enabling you to proceed with your transaction because you have disposed of your legal liability to pay the tax. Now, what happens if I decide I'm not going to pay capital gains tax? And this brings me to the consequences of failing to pay capital gains tax, as well as the consequences of paying capital gains tax late. Now, failure to pay capital gains tax is an offense under the Income Tax Act. And secondly, the repercussions are that the Kenya Revenue Authority can easily sue you in court under the Tax Procedures Act and redeem the amount owing to them in form of tax. So now, late payment of capital gains tax attracts sanctions in forms of interests. This is pecuniary penalties or interest that are accrue or at the rate of 1% of the debt that you're owing in form of tax. This therefore means that for every month that you default, you'll be paying 1% more on the tax that you owe. And under the Tax Procedures Act, that is Section 38 of the Tax Procedures Act, you'll basically be liable to pay the Kenya Revenue Authority that interest in order for you to be regarded as being tax compliant. Well, one challenge that has presented itself in implementation of capital gains tax is the fact that capital gains tax does not seem to take into account where the cost of acquisition of property is zero. For example, when you inherit property from your father, when you inherit property from your grandma or your granddad, and this brings me to the realm of inherited property. Now remember, family transactions are often excluded. However, what about if the person you're buying from property is the person who inherited the property? Therefore, on the face of it, we do not have a cost of acquisition. Now, in this particular instance, the Kenya Revenue Authority has the discretion to decide whether or not to peg your cost of acquisition at zero, or to look into the initial cost at which the person, the deceased owner of the property, acquired that property. And oftentimes, whichever attracts most tax will carry the day. But remember, at the end of the day, capital gains tax is self-assessment tax. And this therefore gives you the opportunity to research on your own and to be able to calculate and find out how much do you owe the government, how much do you owe the Kenya Revenue Authority, how much do you owe the tax commissioner in form of tax. Well, now you're in the know, and I hope you have learned something today. So to get these and more videos, please subscribe to my YouTube channel and find out whether or not you'll be part of the future of law.